most of the ETF providers have made it pretty clear that it's a volatile asset and it's a buy and hold asset. Crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. That second run up after the big correction, the second run up, everybody thought it was going to extend further and it didn't. And so everyone's got PTSD. This is a relatively normal cycle, in which case it would get to 150,000, let's say.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Raoul Pal says that Bitcoin is a volatile and long-term asset, and that the ETFs will attract more investors over time. Crypto land is not just about Bitcoin, but also about other cryptocurrencies that will see more money flow in and out. Bitcoin had a big correction and a second run-up, but it did not reach new highs. Everyone is disappointed and anxious, but this is a normal cycle. Raoul expects that Bitcoin could reach $150,000. Let's listen to more of Raoul's insights and opinions on Bitcoin and other topics.
There's a lot of activity, a lot of repositioning. Net flows have been offset really by GBTC as people are unwinding the arbitrage and stuff like that. So I don't think you need to read much into it. It probably has to digest. Don't forget, you brought forward a lot of demand. Net, what will we brought forward? $2-3 billion of demand. Okay, so that takes time for the market to digest. And then you've got to think through who the RAAs are, who these people are. And if you put them in your head, these are not New York dealing rooms who are getting on the phone and say, buy this now. They're people who are wearing slacks, who read Barron's on the weekend, read about the ETF, aren't sure, go on the golf course, see their best client. He asks them a question. The whole process is slow. They've got to go and have steak dinners and all of that stuff. So the whole process of bringing people in is going to take a while longer, but it's there now. I just think of the ETF as a trade deal between fiat world and crypto land. And so now capital can flow in much easier than it used to. I kind of think of this as a mental model as like China entering the WTO when everybody could invest in China. That's what this is. Now, these aren't permanent residents in crypto land. This is more hot money flows, tourism flows, hot money flows, direct investment, foreign direct investment, that's VC flows. And then we've got a bunch of residents there, people who have wallets and all of that. So I do think of it as an economy, and this just allows trade. If you think about the biggest buyers of this stuff is actually the millennial cohort. What the millennials do really well is they invest in their 401ks every month. And they can put this in their 401ks. So that's sticky. That's why ARK didn't get all the redemptions when it went down 75%. It's because it's millennials who own it and they put in their 401k and they're in it for the long ride. So I think it's the boomer crowd who'll be more concerned about the volatility. I think that's a very good thing. There's going to be a lot of people putting it as a long-term asset, buy and hold, and that should give it the stability that you need, that you don't just get massive washouts from people panicking the moment it goes down. And I think most of the ETF providers have made it pretty clear that it's a volatile asset and it's the buy and hold asset. I think as assets mature, they become less volatile. So I think we need to expect that. And particularly from passive flows of 401k investors putting it in every 2 weeks, every month, that'll keep a bid that didn't exist before. So I think, yes, we'll probably see lower volatility, but we'll also be feeding capital into crypto land, and crypto land's not just the state of Bitcoin, it's a whole bunch of other places that are going to see capital flows. So the Wild West will still exist, but the big daddy becomes less volatile, yes, it's a shame because we can't make as much money out of each cycle. But if our underlying philosophy is we want the adoption of this technology to be broad and deep, it has to go that way. So it's kind of good from that philosophical angle of trying to change the world, bad from the ridiculousness of the cycles and how profitable they can be if you get them right.
Raoul says that there is a lot of activity and repositioning in the market, but not much change in the net flows, which are the amount of money entering and leaving the market. This is because of GBTC, which is a fund that holds Bitcoin and trades at a premium or discount to the actual price of Bitcoin. Some people are unwinding the arbitrage, which is a strategy of buying and selling the same asset at different prices to make a profit. This means that the market is not reacting much to the ETF and that it needs time to digest the new demand. The ETF is a trade deal between fiat world and crypto land, which are terms he uses to refer to the traditional financial system and the cryptocurrency space. The ETF makes it easier for money to flow from fiat world to crypto land, just like China joining the WTO made it easier for investors to invest in China. The ETF will attract different types of investors, such as tourists, hot money, direct investors, and residents. He explains that tourists and hot money are short-term and speculative investors, while direct investors and residents are long-term and committed investors. Raoul sees that the biggest buyers of the ETF are the millennials, who are the generation born between 1981 and 1996. The millennials are good at investing in their 401ks, which are retirement savings plans that allow them to invest in the ETF. He says that this makes the ETF sticky, meaning that it will not lose a lot of investors when the price goes down. He says that this is different from ARK, which is a fund that invests in innovative technologies and lost a lot of investors when it went down 75%. He says that the boomer crowd, who are the generation born between 1946 and 1964, will be more concerned about the volatility, which is the amount of price fluctuation of the ETF. The ETF providers, which are the companies that offer the ETF, have made it clear that the ETF is a volatile and long-term asset, meaning that it can change a lot in price and that it is better to hold it for a long time. As the ETF matures, it will become less volatile, which is good for the adoption of the technology, but bad for the profitability of the cycles, which are the periods of rising and falling prices. His philosophy is to support the adoption of the technology, even if it means making less money from the cycles.
That second run-up after the big correction, the second run-up, everybody thought it was going to extend further, and it didn't. And so everyone's got PTSD. So how I'm thinking about it, I'm giving a 60% probability this is a relatively normal cycle, in which case it would get to 150,000, let's say. I'm giving a 20% chance that it's actually a front-loaded cycle because of the ETF and other stuff, that maybe it gets to that 150 faster and then fades, which will be kind of pain for a lot of people who expect it to go to 2025, right? And then the other 20% chance, I think, is that this ends up being a bubble cycle. And so it looks more like 2011, 12, 13 than it does the previous one. And in which case, if you remember that cycle, it had a interim top correction. Everyone thought it was over, and then it just exploded again. I think there's a decent chance of that, but we need to see the contextualization of how the ETF flows impact, what's happening with monetary policy, what's going on in the economy, how the election is going to play into this. So that's how I'm thinking of it. That upside crazy bubble target, using that kind of everything code structure that I've talked about in the past, we get price targets of 500,000 plus. So even if I discount me for being a moron by 50%, you still get 250 grand. So that's kind of the spread to me, 150, 250. But obviously, who the hell knows? And as you know, the worst thing for any of us is everybody wants price targets, and then a year and a half's time they hate you for it because you weren't exactly right. Think about the crowd that got financialized in 2020. Again, mainly the millennial crowd, right? There's 110 million Coinbase accounts. And when I checked 6 months ago, only 9 million were active. So speaking to the guys at Coinbase, they're like, yeah, in normal activity, it'll get to 35, 40 million, and the top will grow as well. So there's a lot of money still to come in of people who participated last time around, have that interest, still have PTSD, will come back in. So maybe that offsets it. I don't know. I also have a feeling the applications layer of blockchain is going to bring in a lot more use case. So I'm thinking of this cycle as maybe the everything everywhere all at one cycle, when people have different unlocks for NFTs or inscriptions, or different unlocks for smart contracts and some of the other things, and they can use it for everything from whether it's ticketing to real world assets. So It just depends how far that applications layer goes. If the applications layer doesn't make much progress this cycle, then you're dead right. We'll see rebalancing. Don't forget, they're also going to be issuing options on the ETF, and that changes the structure of markets as well.
Raoul assigns a 60% probability that Bitcoin will follow a normal cycle and reach $150,000, a 20% probability that it will reach $150,000 faster and then decline, and a 20% probability that it will experience a bubble cycle and surpass $250,000. He acknowledges the uncertainty and difficulty of predicting Bitcoin's price and the risk of being wrong or disappointing the audience. Raoul mentions some factors that could influence Bitcoin's performance, such as the launch of ETFs, monetary policy, economic conditions, and the U.S. election. He expects more adoption and innovation in the blockchain space, especially in the applications layer, which could create more use cases and demand for Bitcoin and other cryptocurrencies. Raoul suggests that the ETFs will also introduce options trading, which could change the market dynamics and volatility. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.